Hello out there. This is V from Zag Logistics Incorporated. And of course, you've stumbled upon our Drive and Thrive YouTube channel. So this video is going to run on a topic that is very important if you decide to start a trucking business. Now, I'm just going to say, be blunt, and I'm going to be honest about kind of how we started our company. We are lease operators at this point. So one of the decisions that we had to make whenever we, got into this part of the trucking industry, we had to decide on how our business was structured. But the thing is, at the beginning, you're just like, well, what's your business name? Because the company or the carrier that my husband is connected with basically set up all the paperwork and use the ink file in order to pass our papers along in order for us to become, a business legally. So all he kind of did was just do the business name and was like, well, what about Zag Logistics Incorporated? And so, of course, incorporated, and basically entails that it's going to be a corporation. But we were not prepared for what that really entails. So, doing my research, because I'm basically the business aspect, the paperwork person, the pencil pusher, whatever you want to call it, on this end of the business. So, when it comes to corporations, because we would be considered a c-corp, there are several different types of structures when it comes to different businesses. So just, this video is to go over what those different types of structures are and what they entail, and if they would be good enough for you, for your business if you want to create a trucking business. So let's get started. Okay, so the first entity that we are going to discuss is called a partnership. So with partnerships, it's maybe if you decided to get into, build a trucking company and you have another person who would want to share that responsibility with you, that would be more of like a partnership. And this would entail more of, this would be kind of like your simplest way of setting up your business, because it's like you and this other person both own this company, and there's different types of partnerships. So you can have what's called like a limited liability partnership, and I think there's another type, but I can't think of it at this time. But you can do your own research to see what other types of partnerships there are. And it's pretty simple, it's a pretty easy and simple process to, cover this structure. And this is usually for people who go into business together, or if there's multiple people who want to own a company. So basically that's it on partnerships. So let's go to the next one. The next one is called a sole proprietorship. So with a sole proprietorship, you are basically 100% the owner of the company. Now, it might sound great because it's like, oh, I get complete control over everything. I can control this, like that aspect of the company. I can do this, that, and the other with the company. But I would have to say, in my opinion, this is not the one for, anybody who's wanting to run their own trucking company. They shouldn't really use this structure. Now, I'm going to say this. I'm not, an accountant. I'm not a CPA. I'm not a lawyer or anything like that. I can't give out legal advice. All I can really go is on the experience and the research that, we've done being out here on the road, and the different, types of reporting and the different types of paperwork that we've ran into, contracts and things like that. But sole proprietorships are more for, somebody who, has like a lower risk company. And trucking, I would not say is low risk, because you are really literally driving a thousands upon thousands vehicle on the road across the country every single day. So accidents happen that, all the time, that are in your control, not in your control, things of that sort. So for example, if you choose to be a sole proprietorship, that means that you have complete, total legal liability. So let's just give an example of you are on the road, and you might be the driver, or you have an employee that's a driver that gets into an accident, and you are liable. Now, trucking companies do have liability insurance, but let's just say that your liability insurance only covers $100,000. It's just an example. So it covers $100,000, but let's just say that there was damage to city property, there was damage to a personal vehicle, and there was injuries, and all of this was and of course the other person might sue you. So there's not only all of those, all the damage, all the injuries and things like that, but there's also court costs, and there's covering legal fees and things like that. So let's just say it all racked up to about $150,000. So because you and your company are one and the same, because you completely own that company, and this is a sole proprietorship, because that's what that basically means, then you are completely and totally personally responsible. So, okay, your liability insurance does cover the $100,000 part of the deal, but you still have that $50,000. So what can happen is that they personally sue you and take, your from your accounts, or can seize any assets that you have. Like if you have real estate, you've made investments in real estate. So, and those might be worth, one of those might be worth $50,000. They would take that asset and liquidate it, or create, and take the cash out of that and pay off the rest of that legal liability that you have, because you had $50,000 that still was not accounted for. So they had to take it out of your own personal money, your own personal assets. So this is why I would say this business structure I would not suggest personally for trucking companies, because it doesn't really protect you, because you and your business, there's not this barrier here to help keep you from being personally liable. But of course, if you are a smaller business, and if you weren't in trucking, of course, this might be more for you. But in the case of, when it comes to, drivers or driving or trucking and things like that, there has to be some type of, liability, but you don't want that liability to come upon you. So the next structure I want to talk about is limited liability companies. So this one, can be good for you. It just kind of depends on, how you want to do it. So basically this just means that, and you've heard of LLCs, it's like, such and such LLC, so this means that there is actual protections that are made, when it comes to your personal assets versus your company's assets. So if somebody, something happens and somebody tries to sue you, they can't personally hold you responsible, like as you as a person, but they can hold your company liable. But there are other things or aspects that people are not really, that some people don't think about also when it comes to an LLC. If you are an LLC, you are still considered self-employed. So this would be more for, smaller companies, or, maybe even in some aspects could be owner-operators or lease operators. If they only have maybe one truck, or they're only handling their own truck, you could also use an LLC. You would still be paying taxes. So you would be paying Social Security. You would also be paying Medicare as well. But you wouldn't be paid, you wouldn't have to hold yourself accountable for corporate taxes. So there's the bright side about that. So that's pretty much it about the LLC. So the next structure I want to talk about basically is going to go under, corporations. So there's two types of corporations. There's an S-corp and there's a c-corp. So we're going to talk about S-corps first. So S-corps are corporations where, of course, with corporations, you have shareholders that have a piece of stock in a company. But the thing about shareholders is they own part of a company or a corporation, but they do not own the assets of that company or that corporation. There's that. So even if let's just say somebody wanted to sell their piece of the pie or the piece of your business, no matter if if they sell it, because the company will still keep going. The company doesn't close down just because one person sells their part of the company. Also, there are liability protections when it comes to this type of corporation. There are some benefits that are a little different. So you would not be subject to, the certain types of obligations when it comes to corporate taxes, when it comes to C-corps. So this type of corporation kind of protects you from being double taxed. So what I mean by that is that, we'll go into, I'll explain that more when we go into the C-corp, but it keeps you from being double taxed, and you also, it also takes from the profits that you receive from your, through your personal income instead of like your company's income. So there's that. And as like I said before, you wouldn't be subject to corporate taxes. States kind of differ when it comes to how they want to charge you for taxes for S-corps. So you have to do your research on that, of course. But as far as like the IRS is concerned, there are, the filing for taxes for S-corps, so you have to do your research on that, of course. But as far as like the IRS is concerned, there are, the filing for S-corps and C-corps are different. So you actually have to file with the IRS and report to the IRS with those. And so there's that. Here's like the benefit that I think is pretty interesting, or the biggest benefit. All right, so the biggest benefit of an S-corp account is basically that you can, put people on payroll. And it's not like you can't with other business structures, but with this one, it's a little different. So between the S-corp and the C-corp, when it comes to paying your employees, let's just say you are a trucker and you want to pay your family members for doing tasks around the house. So in my case, I'm the administrator of Zag Logistics Incorporated, of course. And so my husband is the owner, but he also is a driver. And so we also have a daughter who does tasks around the house and, cleans the office and the home office and things of that sort. So she would get paid for that. Now, you can put your children on payroll, and if you pay them under a certain amount, which I think it's $12,500 or $12,400 a year or annually, then they would not have to pay taxes. Now, if you choose to pay your children on a C-corp, that's different. So even if they were paid on that minimal amount annually, that $12,000 some odd dollars, then they still would be obligated to pay taxes on that little amount. So you have to really consider what your options, are, and if that's what's right for you. Now, hey, you can still have a C-corp and pay your children, and they can pay taxes if you so choose. And if you want to even do, make this a learning experience for your kids to understand taxes, how they are paid, and because it'd be really interesting to see your kids go, well, I thought I was going to get, $100 this week, but why am I only getting, $92 or whatever? So then they're looking at, well, what is, Social Security, or what is Medicare, or what is this, and so those are lessons that you can use to let them know, like, what this money is, what is this money used for. And on top of that, you basically give them that lesson that, anybody who is an employee of a company has to pay taxes. And so they're learning that at an early age. Now, if you don't want them to learn that at an early age, that's fine. You could just do the s-corp, and they get if you choose to pay them $100 a week, they get that $100 a week. Now, going into the c-corps. So with c-corps, just like with the s-corp, that you have shareholders of a company, and they have a piece of the the corporation, or the pie. So of course, if someone wants to sell their part of the pie, it doesn't stop anything. The business will still run, because all it was a piece. And so, and then in our case, our husband owns all the shares. So if he ends up selling, then the company is sold. But this is that's different. But most companies have multiple shareholders, and with a C-corp, this is more for if you have like multiple employees, like multiple upon multiple employees, because that way they even there are these incentives that companies give where they can own a piece of, like, a share of the company, and with that they can make decisions or be included in on votes that have to do with, like, how what direction the company goes in, or if there's anything new that might happen with the company, they would have to be notified because they are a shareholder. And so a lot of there are many employees that really like things like that, and so there's a benefit there. But they also they make profit, but they have to pay corporate taxes. So there's that. So and then there when it comes to the operations, the reporting and things like that, it's a little bit more challenging, because you're reporting to the federal government, you're reporting to the state government, you're reporting to your local government. I get mail from Louisville Metro from time to time about certain taxes that we have to be included on locally. So that was another challenge for me, because I'm like, I don't know what this is. And so I have to, do a lot of research on my end to figure out, well, what is this withholding, or, what does this involve? And then even if our company would, sell products and things like that, we would have to pay the sales taxes on those products as well. So it's a lot of different things that you're going to have to understand about a C-corp that, a S-corp or a sole proprietorship or LLC might not have to deal with, because you're dealing with a lot of, employees, you're dealing with, shares, you're dealing with corporate taxes and things like that. And then, you might end up being double taxed, because you get taxed on the profits that you make, on top of the dividends that your shareholders receive in their personal accounts. Because anytime that the company makes a profit, your shareholders get money or make a profit. So there's going to be taxes on those profits or those dividends that your shareholders receive. So that's one of the big differences. But it is also more expensive to file for a C-corp. It takes more money, but there are bigger protections when it comes to liability. But of course, if something happens to the company, and the company's found responsible, the company's responsible. So, we have shareholders, but those shareholders are not, it's like they own part, they own the company, but they can't get the company's assets. So they're owners, but not owners enough to where they have access to the company's assets and things of that sort. Now, speaking on, the paid educational, rewarding journey for me, but when it comes to the accounting aspect, I always seem to, have some issues and some struggles there. And so if you're wanting to get into this line of business or get into a business period, it might be a good idea to outsource different parts or aspects of your business. And in our case, we're doing that with the accounting and some of the bookkeeping. And so there's a lot of financial fiscal responsibilities that we have to handle that I get a little overwhelmed about. And so it's not like I can't do the math or something like that, but I don't know much, I don't know a whole lot about tax code. And there are people who actually specialize in this. And if you are not sure on how to do something, just pass it to somebody else. Give that responsibility to somebody else that you can trust, that you have done your research about, that you have taken out the time to interview this person and see if they're really, really good at what they do. Are they reliable? Are they able to respond to you within 24 to 48 hours if you need them? Because sometimes there are things that are time sensitive to where you might end up paying penalties if you don't turn this in on time. So, or file this document in time. So these are things that you have to consider. And going back to the 5 different structures, find something that is going to fit your company. Because, some of us, with the C-corps, it's basically like, if you're planning on wanting to get to a place where you are, you are a Prime Inc. or you are a Swift or a JB Hunt or a Mercer or whatever, these where you have like all these different fleets of trucks, all these vehicles that you are over and are running. And if you want to choose to do that, that's wonderful. But for some of us, even for myself, I'm like looking at these different structures and I was like, well, maybe we should have did a C-corp. I mean, not a C-corp, excuse me, but a S-corp, because now we currently are in a C-corp. But, if it grows, then you can change it, and because you don't have to stay obligated to that one structure. You can make changes to that, that structure or that entity if you want to, if you need to, and it depends on what your company's needs are. Now, hey, we might end up changing over time, and that's fine. But at least we knew what we wanted to do, at the end of the day. So that all being said, I hope you have the rest, a wonderful rest of your evening. And if you have any comments or questions or whatever, just put them down in the comment section. And remember to like, share, and subscribe.